Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Getting Started with thinkorswim. And today is a 5-for-1 deal. We're going to be going through 5 drawing tools on thinkorswim charts known as Fibonacci tools. It should be a great discussion. We're going to be talking about 2 tools that might be used to measure how far a price might move. And we're going to be using 3 tools that might measure how long a price move might last. So a lot to talk about. Before we get to that, though, let me first of all say hello to everybody that's already chatting in. Great to see you out there, SJS and Speak Truth. We have Prayful and Marcus and Eva and Villager, Bob, everybody else. Thanks for joining us week after week. I really do appreciate your attendance, your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This one kicks off promptly 3 o'clock Eastern time on Mondays. We'd love to have you here in the live stream. And also want to let you know that Kevin Horner is going to be hanging out in the chats with us today. Great friend of mine. Kevin's going to be addressing any questions that I can't get to, as long as they're on topic. Kevin's there to pick up the slack for me. Thanks for being there, Kevin. And Kevin and I would also like to issue an invitation to you. If you're not following us on X, please do that. It's a great resource to fill in the gaps between these live streams. It's the best place to connect with your favorite presenters out there on X. So you can find Kevin there at Kevin Horner CS. You can find me there at Cameron May CS. All right, but let's get into this. Discussing Fibonacci tools on thinkorswim. So as we do that, of course, first thing we need to do is pause to consider the risks associated with trading or investing. This is important information, so please do bear it in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including loss of principal. Okay, so with that said, set a basic agenda for today. We're going to spend about 20 minutes learning some tools on thinkorswim charts, and it's all about Fibonacci's today. So I am going to give a very brief introduction to just what the Fibonacci number sequence is, because that's sort of elemental to the construction of these tools. But we want to spend the bulk of our time, first of all, discussing 2 Fibonacci tools that are sometimes used by traders to gauge how far a price might move. Then we're going to talk about 3 Fibonacci tools that are sometimes used by traders to gauge how long a stock price move might last. And then, of course, we want to make sure that we're applying each of these new tools to thinkorswim through that thinkorswim desktop software platform so that we get acquainted with those functions, okay? So let's go to it. Let's go right to thinkorswim charts. And for today's example stock, I'm just going to be sticking with Broadcom. 5 tools to cover. I don't want to go through too many stocks. I think we'd run long. So AVGO is going to stand in for us. Ricebread, just saw a comment by Ricebread, pretty funny. Anyway, let's start off with some numbers that are going to be vital to each of these tools, okay? These numbers are called the Fibonacci sequence. I've explained them in previous videos in great detail. I'm going to give it 1 or 2 minutes here just as a quick recap. But basically, the Fibonacci sequence is a mathematical sequence. It starts with the number 0, proceeds to the number 1. We add up the last 2 numbers in the sequence to generate a next number and just continue that pattern. So 0 plus 1 is 1. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8, and we'll just carry that out some distance. How about we go to 21, we go to, what is that, 34, we go to 55, we go to 89, and so on, okay? So that is known as the Fibonacci number sequence. And there are also ratios associated with this sequence. We just take the different numbers and divide them either by a number, a spacer to the left, or a spacer to the right. And that generates a series of numbers. For example, if we take one number and we divide it by the number to the left, we get a ratio of 1.618. If we take a number and divide it by the one just to the right, we get a ratio of 0.618. And then if we take a number, for example, 34, and divide it by a number 2 spaces to the right, let's break out our calculator. I don't have all of these memorized, so like do-ish, okay? Anyway, 34 divided by 89 gives us the number 0.382. I'll put a 0 in there, 0.382. If we take a number and divide it by the 1, 3 positions to the right, for example, 21 divided by 89, it gives us a ratio of 0.236. There we go. And finally, just to get extra fancy, if we take this number, 0.618, and we retrieve its square root, we get this final number of 0.786. So we have, whether you follow the math of that or not, we have a fairly easy sequence of numbers and then some ratios that are devised from those numbers. And those are used for a number of purposes in mathematics and biology and other harder sciences, but also those numbers have been adopted into the creation of some tools for the purpose of trading. Okay, let me just see if I can minimize that margin just a little bit. Ricebird says she knows or they know Kevin's middle name is Fibonacci. Yeah, well, maybe. I don't know what Kevin, what is it? Kevin Allen Horner? I don't know. I have any clue. Anyway, well, let's start to acquaint ourselves with some of these tools that are derived in one way or the other from these ratios or numbers. Okay. And 4 of these, just, 4 of the 5 that we're going to be discussing really focus on the ratios. There is one, though, that ignores the ratios and just uses the numbers. But in any case, let's come down here. As we go to our drawing tools on thinkorswim, we have a number of drawing tools, but some of you probably noted all these Fibonacci tools. And so I wanted to acquaint us with at least some of those. I thought it would be a little bit ambitious to try to go through all 8. So I thought we could tackle 5 in 20 or 25 minutes. So we're going to start with Fibonacci retracements. And this is a tool that's sometimes used by a trader when a stock has hit what might be called a pivot point or a reversal point and has moved substantially in one direction. Naturally, a question might arise that, hey, I wonder how long, once we hit another reversal point, how long might we go in that new direction before price turns and goes back up again? Okay. Can lead to all sorts of trade scenarios. So, for example, how about we start, let's start back here in November and December. You can see here we have a stock that's moving in a given direction. I will say typically Fibonacci is not commonly used when a stock is what we'd call range bound. So periods of time when we're kind of going like this, stock is basically going sideways, not usually a time when we might apply a tool like one of the Fibonacci's. But when a stock has a given trend in one direction or the other, and then we have a reversal within that trend and acceleration in the direction of that trend, this is where we might employ these tools. So I'm going to come over here to our active tool and click on Fibonacci Retracements. And let's draw on our first Fibonacci. I'm going to go, and this is the way I will say these ones are typically drawn. Typically, when using Fibonacci retracements, we go to the top of a recent up move, looking back to the reversal or the pivot point just before that, and we're going to click at the top and then move down to the bottom. And what you'll see as we do that is that it draws a series of lines. Now, I might need to zoom in a little bit. I do want you to note, though, that there's some lines up here. 161.8. Hey, that should sound familiar. 261.8, yeah, it's an extrapolation of 161.8 or 61.8, and then 423.6, okay? Yeah, these are some ratios that are derived from our ratios over here. That's where these figures are coming from. Now, as I zoom in, let me zoom in on just this period right here. Let's talk about the potential application for traders. What this tool will automatically do with just those 2 clicks is it'll draw in all these series of lines. And traders will commonly use these lines to hopefully anticipate areas of support and resistance that might help them in the planning of a trade. So, for example, when we get a strong move to the upside from a reversal point at a low within an established upward trend, and then we hit a second reversal point at a high and we start to pull back, well, drawing a Fibonacci from that high to that low might draw in some potential support lines below that top reversal point. And quite commonly, the trader's attention might be given to the 61.8 and in particular the 50% retracement line. And that it might be anticipated to serve as a possible support. Okay. And then a trader might plan entries around that, for example. And upper levels, known as extensions, may be used to plan, let's say, exits. Now, if you want to see a more detailed examination of this Fibonacci extension tool, I discussed that in a recent webcast. You can just go to our playlist on YouTube and type in the word Fibonacci. So it's Fibon, one N, ACCI, two C's, and you'll find that previous webcast. Okay? But that is the common purpose of this Fibonacci extensions tool. Okay? It's to draw in potential support and resistance lines and to use those to plan potential trades. And by the way, if you look at these numbers here associated with each line, you're going to recognize 78.6, there's 78.6. 61.8, yep, it's a ratio of our numbers. 38.2 is a ratio of our numbers. 23.6, a ratio of our numbers. And then there's some other numbers. 100 and 0 are just the distance of the move, and 50 is just halfway point. Okay. But that's a quick introduction to the Fibonacci extensions tool. I've examined it in detail in the past. I thought I'd give it a quick new treatment just to revisit. But I also wanted to talk about these other Fibonacci tools. If we come back down here to our active tool again, let me move on to our second tool known as Fibonacci Extensions. So we've been talking about Fibonacci Retracement. Sometimes in my enthusiasm to explain, I can say the wrong thing. That's what just happened. I know that this is a Fibonacci retracement. I'd already mentally moved on to extension. Anyway, forgive me. Yep. Retracements first, now extensions. So I'm going to click on this tool. And let's just clean things up. I'm actually going to borrow this space in the left just to give myself more working space on the thinkorswim desktop. And I'm going to right click on the tool on the drawings that we've already made. Right click here and just clear that drawing set. Oh, there is one other point I wanted to make because somebody brought this up in a webcast where I was providing chat support earlier this morning. And that is, let's zoom out here. And they said, hey, Kevin this morning was drawing from bottom to top, and Cameron typically draws from top to bottom. Who's right? Totally personal preference. But let me just show you something here. If I go back to my Fibonacci retracements, here's a great big move right there. Okay. Let me just draw from the top to the bottom. And as I do that, you'll notice we get these lines drawn above that move. Okay. 161.8, 261.8. Well, if I instead draw from the bottom of this move up to the top, so how about I'm going to move over here and just draw a second Fibonacci. You'll notice I'm using my crosshairs and I'm intersecting the crosshairs horizontal line with my lower Fibonacci line. So I'm going to click down there and then move up to the top, drawing in a way that Kevin actually demonstrated a little bit earlier this morning. It draws an almost identical set of lines between 0 and 100. But crucially, it draws the extension lines downward. So this might be used drawing from bottom to top. If we're using the lines in the middle, it really doesn't matter which way. But if we're trying to project targets to the upside, maybe draw from top to bottom. If we're trying to project targets to the downside, maybe draw from bottom to top. That's the biggest deal. There is a tiny difference between the placement of lines, the 50% lines in exactly the same place. Let me zoom in a little bit so you can see what I'm talking about here. We expand our lines there. Yeah. 38, 50, 61.8, both in exactly the same spot. It's only these two lines, 78.6 and 23.6, slightly different based on direction. Hardly functional differences here. Okay, but let's go to our other tools. I'm going to right click. Let's clear this whole drawing set. And let's learn, and it won't take very long, about, there we go, just resetting my chart. Let's learn about Fibonacci extensions. Now, in order to use Fibonacci retracements, we have 2 clicks, top to bottom, bottom to top, whatever. It takes 2 clicks. Fibonacci extensions, actually, instead of just looking at one move from, from a reversal point, one reversal point up or another reversal point down. It actually looks at an entire cycle. In other words, from low up to high and then back down to low. So if we were to borrow a different one, how about we look at this move October to November? Okay. And actually, maybe we could even go back here to September because that looks like we kind of cycled up and then pulled back. Well, using my Fibonacci Extensions tool, I just go to the bottom of that first move, click, move up to the top, back down, complete the cycle. And what you'll notice is this now positions a Fibonacci a little bit differently, but the math is all generated from the same numbers and ratios. But drawing in this way, for some traders, they just prefer this. It provides a slightly different set of potential areas of resistance and potential areas of support. So, for example, our trader here might have been looking for, after initial retracement down to that 38 to that 50 level, maybe their projection is up to the 168 or 161.8 for an initial target. And you can see we hit that, pulled back down, and that acted as a new support. And as a matter of fact, for Broadcom, it's actually used those Fibonacci lines fairly well through a good portion of the year as important levels of support and resistance. And as of the drawing of this back in September, October, November, the trader could not have known that this was ultimately going to be the case. In this case, it worked out. Doesn't always work out that way. But just know that that is how a trader might apply this Fibonacci Extensions tool to the chart. And also just know that the objective here is to project, okay, where might prices move as they continue to move through cycles. Okay. SJS says math is cool. Yeah. SJS also says to help remember, whichever side you click first is where you want to see the extensions. That's right. Yeah. So if you're clicking at the top when drawing with your Fibonacci Retracements tool, clicking at the top is going to project. Clicking at the bottom, if that's your first click, is going to project down. Yep. All right, I'm going to let you experiment with this Fibonacci Extensions tool, to what extent you feel is appropriate for whatever you have planned for your trading. These are all just for educational purposes. But both of the tools that we just explored are for measuring how far price might go. Now, also within the thinkorswim desktop platform are a series of tools that might be used to gauge how long a price move might last. So let me just right-click on our drawn item here. Let's remove that drawing. And I'm going to switch now to the Fibonacci time series. Now, how many of you are familiar with this? Go ahead and chat in if you're familiar with actually any of these time Fibonaccis. I will say there are 3 of them. And I'll tell you, when drawing them, here's a little clue. The first one uses 1 click. The second one uses 2 clicks. And the third one, we use 3 clicks. Okay. So the Fibonacci time series, we look for one of these major reversal points in an established trend, go to the low in the case of a bullish trend, and just click on that candle. It doesn't matter top, bottom, middle of the candle. Doesn't matter. It's actually the date that matters here. So for example, how about we go to, I don't know, December, looks like the 6th was the lowest point of this cycle. So if I were to click on December 6th, what that's immediately going to do is it just projects out a whole series of lines. And now if I move my cursor around, you notice it's not actually moving the indicator at all. If I go backwards, it's moving with me as though I want to reposition the indicator. But if I'm fine with where I started, I just click again, and that sets these lines. Okay. And then it draws out these lines now based on the numbers. This tool actually uses the numbers. So it starts with your 0 date, and it advances 1 day. And then it advances another day, and then skips 2 days, and then skips 3 days, and then skips 5 days, and then skips 8 days, and 13 days, and 21 days. And that's how those lines are drawn. But regardless of how they're drawn, what some technicians will do is as those days develop, they'll keep those lines on their chart. And each time we approach a line, there may be a question in that trader's mind, are we about to reverse and start moving in a new direction? You can see how sometimes these lines intersect fairly nicely, not always perfectly, but as price is coming down and encounters a time series line, it sometimes will be an inflection point and start moving up again. And as we hit a new line, maybe we start moving down again. Whatever direction we're moving, we may kick into a new direction. That's the assumption there with this sort of a tool, okay? So that's our Fibonacci sequence. It's really pretty quickly applied. The rest are variations on the same theme, just using multiple clicks. So for example, let's right-click here. Let's clear our drawing set. Let's go down to our next time Fibonacci. This is the Fibonacci time ratios. So as the name implies, instead of using the numbers, it uses the ratios, okay? And if we were to go to, how about we pick a different place? Should we go back here to September again? Yeah. We'll start here. And we're just going to click from the bottom of one cycle to the bottom of the next cycle. And as we do that, we start to project out a ratioed series of potential time inflection points. Same interpretation, though, as that is left on the chart. And as price advances toward one of these series, it may be a signal that we're about to move in a new direction. So if we're heading up as we're approaching one of these lines, it might be the signal to the trader, hey, maybe that cycle has run its course. Does it work perfectly every time? Nope, but nothing does. All right, now the last one, it's really just very much like the first two. Let me hold on a second. Let me get rid of that. There we go. Let's clear that drawing set. And the third one is our Fibonacci time extensions. Very much just like our Fibonacci price extensions. We use 3 clicks to set this one up. We just go back to, let's go back to that same cycle. Click once at the start of the cycle, click again toward the top of the cycle, and then a third time at the bottom of the cycle, and you can see how that projects time extensions into the future. And so the trader might look for possible reversals as we start to hit some of those major time extensions. Okay, there we go. All right. In any case, guys, that is your introduction. I think this is going to be new for a number of traders out there, but I think you can also see the potential for how this might start to introduce all sorts of trade ideas for trade setups for a trader who uses price, possibly time, in the planning of their trades. So it's not a promotion of these tools, but just wanted to give an introduction to those 2 that are based on price, 3 that are projecting time, 5 new tools to be familiar with now on thinkorswim. All right, everybody. We've done what we set out to do today, though. It's time for me to let you go. But just remember, as you go, we have other resources available to you outside of these discussions. Number 1 is X. If you're not following Kevin and me on X, please do that. It's a great resource. It doesn't cost anything to follow. But you can find Kevin on X at Kevin Horner CS. You can find me there at Cameron May CS. And it is best place to connect with us in between the live streams. Okay. Also, make sure that you're subscribed to our Trader Talks channel on YouTube. So you can just go right down below the display window right now, click on subscribe. That doesn't cost anything. It literally only takes a moment, but it's the way YouTube works. Subscribe, and then it just allows you to more readily follow the new offerings and the previous offerings of the channel. And for example, our channel is the best place to find our previous playlists of webcasts that were already delivered. They're organized by topic and by series. Very easy to focus in on what's important to you. All right. Hey, everybody, thank you for all of those who have already clicked that like button. I can see 19 people have already clicked like. Please do be in the habit, if you enjoy a webcast that you're watching from Trader Talks, make sure you're clicking that like button every time, whether you're watching the live stream or you're watching on the archive. It always helps. It lets the presenter know that they're appreciated, and it helps boost us in the YouTube algorithm. So lots of benefits for doing that. All right, everybody, go enjoy the rest of our educational offerings. Thanks, Kevin, for helping out in chat. I don't think that there was a survey. Nope, I don't think so. Thanks, Kevin, for posting the playlist link. Anyway, we'll do this again, exploring new tools on thinkorswim next week. I have other webcasts between now and then. I'll look for you in a future webcast. I'll also look for you on X. But whenever I see you again, until that moment arrives, so I wish you the very best of luck. Happy trading. Bye-bye.